Thanks, Chris. Analysis time now with Scott Phillips from Motley. Scott, good evening to you, and let's begin with that James Hardie result. Chris mentioned a record quarter and strong profit growth. How impressed were you with those figures?
Tomo, good evening. These were, quite frankly, astounding figures given the disruption to the economy both here and in the US, where James Hardie's two biggest businesses are. Sales are up 35%, profit up 50%, and the company increasing its full-year guidance to what's now going to be between 20 and 30% growth on last year. Now, yes, last year was COVID affected, but if you think about what's happening over the last 3 months, what might happen in the future, even with the construction slowdown here in Australia, James Hardie is doing a spectacular job of finding growth amidst the carnage.
Some big numbers there. Investment manager Challenger was another to report, and it was a big rebound from last year.
Yeah, its shares were up 2% today, Tomo. This is one of those scenarios where we should really call this expectation season rather than earnings season, because profit was down between 14 and 19%, depending on which number you wanted to choose. But it was just not as bad as it could have been, and it was within the company's guidance range, and that was enough, plus a dividend hike of about 14% to keep the market pretty happy. Sometimes all you've got to do when the market's already got low expectations is just do what you say, and the share price can recover.
Tomorrow we'll find out about the CBA profit. A healthy gain today in anticipation, perhaps?
Yeah, as Chris mentioned, shares up 1.5%. Look, combination of anticipation for tomorrow and to some degree, I think the halo effect of yesterday's Suncorp result. We talked yesterday about how good those numbers were, and they were really, really good. I think some hope that not only the underlying profit will be good for Commonwealth Bank, but we may yet see what they euphemistically call capital management. May well be a share buyback, maybe a special dividend or something else. Hopes are high. That might mean, by the way, the risk is on the downside, but CBA probably going to deliver a pretty good result.
Scott, on the data front, it was both consumer and business confidence figures out today. No surprise, both were down.
No surprise, still hard not to be disappointed by the sheer size of the drop, Tomo. A 19-point fall in business confidence, and consumer confidence now negative for the first time this year. Again, as you say, no surprise because we know what we've been going through over the last little while. But as we've said for weeks now, confidence is a leading indicator. It tells us what we expect to happen, and that's the basis of our spending and investment decisions. Spending for us, investment for businesses. When those numbers are negative and poor, it really does raise the spectre of a slower, frankly, more difficult climb out of this downturn. The possibility of a recession, I hate to say that, but that's the big issue and the big risk with confidence right now.
Okay, and finally, how's Wall Street looking?
A bit each way at the moment, Tom. A little bit like last night. The Dow was down a little bit, the Nasdaq up a little bit, the S&P 500 up by 0.01%. That's about as flat as it comes without being exactly zero. We'll have to wait and see what happens in their market overnight.
All right, Scott Phillips, thank you.